Hey everybody, what's up? The compliments are just pouring in today. The accolades are pouring in. All right, yesterday I sent out my forecast for today's jobs number. I said it would be 209,000. It was 201,000. I also said in my email that we are likely going to see very strong earnings gains, wage gains. It was very strong, up 77 cents. That's a 2.9% rate. My data, once again, was superior to everything else out there. The forecast consensus was for 190K on the payrolls. And by the way, yesterday's ADP payroll report came in below consensus at 163. So my forecast at 209, and it was 201 was the exact number, at 209, got the direction above. Remember yesterday in my video I said one of the things where I have excelled beyond anyone else, no comparison whatsoever, is the degree above or below the consensus, and that's where you get the move. And in the email I said dollar was going to rally, which it did. I said bonds were going to sell off, which happened. I said stocks would sell off and then rally, which we were going to see that probably. And I said gold would sell off and commodities would sell off. All that you are seeing happening. So hit it out of the ballpark. And I just want to read some of the comments of emails that I've been getting to you. Here's one, just a quick thank you for the excellent information. More than met our expectations. That was from somebody. Another one, fabulous work, Mike. Very impressive. Here's another one, fantastic work. Very impressive. Again, someone else wrote, you did it again! Exclamation mark. And really good call. I got a number of these coming in, and people understand. Listen, this was not only for subscribers of MMT Trader Report, but zombie trading. The people who subscribe to that, I had one guy saying, man, it's been so fun taking money from these zombies. Obviously, he's doing very, very well with zombie trading. Of course, you could sign up to all these services by going to my website, pitbulleconomics.com, and signing up for a 30-day free trial of each of them. By the way, if you take both, you will get a discount. And I will, one of them will be $70 a month as opposed to $195. So you pay full price for one, you get the second one for $70. It's a really good bargain. Anyway, just to now discuss a little bit what is going on, the outlook. Very interesting, actually, and I started to get into this yesterday. In particular with the U.S. dollar, which I think is driving a lot of the markets now on this, the dollar's correction that we have seen over the last 5 months, the upward correction, the belief that the trade wars instigated and initiated by the United States, by Trump, will be positive 100% for the U.S. and the dollar and negative for everybody else. I believe that thesis is coming into question a little bit. It's time for the dollar to make its move, okay? We've seen that correction. We're up, dollar index hovering around 95. You know, like the movie Scarface, where Al Pacino says, you got to make your move. You got to make your move, okay? The dollar's got to make its move. Now, here's what I mean. Since the July trade deficit data was released earlier this week, and we saw a very, very sharp deterioration in the trade deficit in the month where the tariffs had been already enacted. Okay, so according to Trump, this was not supposed to happen. It actually is being viewed as the policy backfiring. Okay. Now, most people view the trade balance in the way you would expect them to view it. They see trade deficits as negative for the currency. They see trade surpluses as positive for the currency. Now, there is validity in that. However, there's a little bit too much axiomatic thinking, like you can't just only go on whether the trade balance is positive or negative. Other factors obviously affect exchange rates. However, a lot of this, what we're involved in here, trading, investing, is about perception, it's about belief. So now you're starting to see, I'm starting to see, at least on some of the more I would say, sophisticated or savvy Forex blogs, and in discussions of policy that I see online, this sort of questioning, hey, maybe this trade war thing isn't working to the advantage of the U.S. as we originally thought. Like, why is the trade deficit blowing out to 51 billion or 50-something billion a month when it was 46 billion the prior month and the tariffs hit? And by the way, as I said yesterday, this doesn't even reflect the sharp drop in petroleum exports that we have seen over the month of August, and which we'll probably continue to see, since, remember, China enacted retaliatory tariffs against the U.S. And that's only going to continue because now another 200 billion worth of Chinese goods are subject to tariffs. So the trade deficit widening will be viewed by some people, asset managers, investors, who are, let's say, among the more savvy, who are going to say, that's not working out the way we thought. So I think today's an interesting day. We got that that positive jobs report, the payroll, the wage gains. That's the thing, because you see what's happening in the bond market. You see 10-year yields, which, I've stayed bearish on bonds. I said yields are going to go up. They're going to go up. You don't buy bonds when the central bank is raising rates. We'll see how the dollar reacts today. You had the reflex zombie reaction of dollar buying today. But let's see what ensues over the next couple of days. If it could shake this off, or if it fails to hold these gains, then I think that's a pretty good indication that some of the more savvy investors are starting to question this kind of universal thesis that, the trade war is only a positive for the United States and its currency, and only a negative for everybody else. I think that whole perception will be called into question. So anyway, thanks to everybody who sent me these really nice emails and accolades and compliments. Again, if you want to sign up for my report, go to pitbulleconomics.com, sign up for a 30-day free trial, and everybody, have a great weekend. Bye-bye.